Trump and Putin just wrapped up the summit in Anchorage, and the outcome could shape where gold prices head next. As I predicted in my previous video, the meeting ended without a clear breakthrough. In other words, no Ukraine ceasefire, no major deal. But both leaders tried to spin it as a positive. However, the markets didn't get any hard details to trade on. That means the geopolitical risk stays high.
The broader context is that the summit occurs amid ongoing US sanctions on Russia, Arctic cooperation talks, and Trump's push for quick resolutions to the Ukraine conflict, which has now lasted over 3 years. No escalations like missile tests have occurred, which has reduced immediate tensions.
The post-summit reaction has been the no-deal outcome hasn't sparked a rally or a sell-off. Instead, prices stabilized with minor gains as the positive tones avoided escalation but left uncertainties intact. Analysts note that a failed or contentious meeting could have boosted gold as a hedge against risk, but the amicable stalemate has kept it range-bound. Broader factors like the US tariffs and energy market shifts, for example oil dipping on summit news, are seen as more supportive for long-term gold hedging. Trump also floated the idea of tariffs on countries that keep buying Russian oil, but at the same time hinted that he might not follow through, at least on India. So a lot of talk, but no concrete policy yet. But if tariffs on Russian oil buyers do happen, that could push the prices up, which would stoke inflation and in turn support gold. Earlier this week, traders were spooked when rumors suggested US tariffs might hit gold bars. That sent prices jumping, but the White House later clarified gold itself won't face tariffs, so prices then cooled back down.
In India, prices dipped just in time to spark buying, especially for gold, which is considered a lucky and traditional purchase during festivals. Retailers are cautiously optimistic that India's seasonal gold love story will pick up again soon.
So going forward, what should we watch out for? Remember, this is speculative and not financial advice. 3 major things. 1. Any follow-up talks or actual progress on a Ukraine ceasefire. 2. Real details on tariffs against buyers of Russian oil if they do end up materializing. 3. And US economic data, because strong numbers mean fewer Fed rate cuts, which is usually a negative for gold. Overall, the summit's inconclusive result has contributed to gold's consolidation rather than volatility, with investors shifting focus to the upcoming US data and Zelensky talks. If tensions do re-emerge, gold could see an upside. Otherwise, downward pressure from economic indicators may persist. The overall risk backdrop still leans supportive. Until there's real de-escalation, dips in gold will probably keep finding buyers.